Hello guys, Stock Saturday, and it's been a slightly red week for me, a little bit worse than the markets. Still seem to be sort of a little bit unhappy about rate cuts or rate cut in December and sort of going forward. I mean, that seems to be what is causing it. I'm not sure it really should. I mean, 0.25% cut in December, whether it happens or not, isn't really going to make all that much difference. And sort of, we know Jerome Powell is going to be out by May, so I think people would start pricing in sort of whatever is going to come after that. But yeah, people sort of got very unhappy and then sort of excited again, and yeah, maybe there's something else going on. But S&P down about 1.65% for the week, Nasdaq down 2.61%, and my portfolio's down 4. Sort of crypto side got hit quite a bit more, and gold and silver not doing particularly well at the moment either. But yeah, we've had some interesting news. So one of mine that's not gone particularly well is Hive Digital. I sort of had my mostly options now for January, and yeah, basically it doesn't look like a huge amount is going to happen by January, even if we sort of got to back to sort of $100,000 Bitcoin. I don't think Hive is going to be doing all that well because they're one of the highest cost miners, even though they are sort of improving that cost with their expansions. But yeah, I sort of have been trying to roll the options over to January 2027 because I still think next year is going to be a good year. Not part of the sort of 4-year cycle theory idea. I think it was, it's not been based on the halving for a long while. It's Bitcoin's a macro asset now, in my opinion. So yeah, I think next year could do well, and so yeah, I'm trying to sort of sell what I can of my options, and sort of some of them are in profit. To be fair, the sort of $10 Hive options I'm trying to sort of sell for near enough whatever I can. You get a tax loss for that. So we get a little bit of money back for them, and then buy January 27 options with the proceeds. So yeah, it's a loss, but it's not quite as bad as it could be. But they did report a couple of weeks ago, actually, the months for October's results, and they produced 289 Bitcoin because they have been expanding, well, relatively aggressively. Sort of Irons and CleanSpark were going a lot faster than this when they were expanding, but yeah, this is quick for Hive, I suppose. Yeah, up from 267 in September. 117 October last year, so that's pretty strong. They're now at 9.3 Bitcoin per day, and yeah, fleet efficiency 17.7. That's pretty good. Iron at sort of 15. CleanSpark I think at 16. So yeah, that's pretty good. It's just their electricity cost that is high, but the more they sort of blend low-cost Paraguay electricity into this, that should help. So yeah, they're gone through their hash rate growth, all of this in Paraguay, and they're saying they should get to 17.5 joules per terahash. They're at 17.7 now, so not much more to go. And they are upgrading one of their Bitcoin mining facilities in Canada to a Tier 3 plus AI and HPC data center. I think partly because Canada don't want Bitcoin mining anymore, so kind of forced into that. But yeah, they're putting quite a lot of GPUs in this. It's engineered to support up to 25,000 NVIDIA GPUs. Not quite sure they're going to get to that straight away, but they're looking to put an awful lot into it, and yeah, hopefully sort of become part of the Iron and Cipher competitors, albeit on a much smaller scale, and sort of presumably focused more on Canada, and leave sort of Paraguay for Bitcoin mining, potentially go the data center route in Europe, and yeah, sort of with economy picking up next year, more data center build out, maybe Hive can have a bit of a re-rating, and my January 2027 options, newly purchased, could do reasonably well and sort of pay for the loss on this year's options. So who knows? But yeah, and then they came out with this, so they actually treat Buzz AI, the sort of data center side, as a separate company, sort of for subsidiary, if you like. And they've announced quite a large deal, sort of expanding the Bell AI deal, um, which now, yeah, it's going to have over 6,000 latest generation GPUs by the end of 2026, and they're expecting this to generate 120 million in additional run rate revenue, with operating margin of 80% after electrical and data center costs. So you've got capex to build it and everything, and then sort of once it's so it's not including depreciation, I'm guessing, but operating margin alone of 80% is pretty good margin revenue. That's in addition to their current 20 million run rate revenue. So they sort of said, they were looking to get to 100 million. This would take them to 140 by the end of next year. So quite aggressive expansion. I wasn't expecting that, and sort of does add to the potential market cap. Whether they're going to need to be doing more share dilution to get this, I'm not entirely sure. The market cap is quite a lot more than it used to be, even when they were at $3 share price before, because they've been issuing a lot of shares. But yeah, I think there's certainly potential for these. It looks like Cipher Mining just did an additional deal for it was sort of 100 megawatts or something. Plenty of demand out there for it. I have been hearing the price per megawatt, if you like, for these deals is, continuing to increase every time someone does a deal, because there isn't all that much power out there, basically. Not sure what the sort of demand is like in Canada and Sweden. Most of these deals are obviously happening in America, and sort of primarily, it seems, in Texas. So yeah, we'll have to see, but fairly bullish on this potential for Hive for next year. I've got my remaining iron options running till March, so it doesn't give me all of next year, but they're obviously quite a bit further ahead than Hive, and sort of potentially, another sort of deal getting announced between now and March, and sort of Bitcoin price, I think by March should be quite a bit healthier. I think iron could do well by then. I'm not really looking to sort of sell those and extend them until sort of to have all of next year. I don't really think there's a need for that. I've obviously sort of sold out of nearly all of my iron. These options are sort of currently 50x in the green, so yeah, I'll just sort of leave those where they are, and hopefully sort of sell those January, February time, sort of depending on what the price is. But yeah, they release their results. Everything here is sort of largely what we've seen before and on the monthly updates, although they do seem to have kind of stopped their monthly updates. But yeah, a lot of the numbers are sort of nonsense. Net income isn't really net income. That asterisk is doing a great deal of work there, because there's all sorts of adjustments that would go into that to give you adjusted net income, non-GAAP net income. It's really all about development of these data centers and deals for them, basically. This is one of my sort of heavy growth stocks. Yeah, they note at the end here the expansion to 140,000 GPUs represents 16% of their 3 gigawatts total connected power portfolio. So they're trying to get you to sort of, scale up the deals that they've already done by, 6 times, and sort of say that they could use their 3 gigawatts of power. Not quite sure you could get to all that, whether the demand is there for all of that, but yeah, there's certainly potential, and that would get people talking about the $200 Hive, I think, that people were sort of saying before. Not quite so convinced. Sort of sold a lot of my options when Hive was sort of 50, 55, 60, and a little bit at $70. So that was near enough all-time high. Pretty happy with that. Obviously, people think it could go far, far higher next year. Kind of thought we would be sort of higher around about now, with sort of Bitcoin price being better. But here we are at 85,000. So who knows? Just something I thought to note as well on the sort of general stock side. I've often looked at the fear and greed index for crypto and sort of where that's going, but there is actually one for general stocks that CNN do, sort of based on stock price breadth, like how many of the stocks in the S&P are doing well, for example, not just whether the index is up. How many people are putting put options versus call options and things, and volatility, all sort of go into this index, and it's very, very low. Considering S&P's like 5% down from all-time high, it's not exactly a lot, a mild correction. And yeah, it's at 11, extreme fear at the moment. Yesterday, it looks like, was 6, and a week ago 21. So you can see it's gone drastically down recently. Really, a month ago, 28, which is fear, but not even into extreme fear. And then just all of a sudden 21, 6, 11. You're sort of in basically the depths of this. If we sort of zoom out a little bit, 6, 7, is sort of pretty much at the Liberation Day lows. Did get to 3 and 4 in the Liberation Day lows, but the S&P was 4,800, I think, at the bottom, and we're at sort of 6,500 now. To be at pretty much the same level of extreme fear seems quite crazy, really. But I suppose that was just a sort of one-off shock from Trump, whereas now people are sort of concerned about, the AI bubble and interest rates and all sorts of stuff. So yeah, I just thought that was worth pointing out. You've got sort of the S&P barely down, really, and people are already in extreme fear mode. So I thought a quick look at one of my, my largest individual stock holding now, aside, excluding the options, being Amazon, which may be a bit of a surprise to some people, sort of looking at my portfolio over the last year or two, but there we go. It's pretty much impossible to go through all of this because there's, so much in here. They're the sort of the biggest company I've owned in a long while, so there's a huge amount of stuff going on. They're into sort of space satellites and things. They're into making their own chips, on top of the sort of core business of the retail side and Amazon Web Services. They're adding more power, 3.8 gigawatts of power capacity. So you can go through all this, their AI, large language model stuff, and new Amazon Web Services locations, expanding same day delivery on in various countries, and yeah, the Amazon Prime video service and sports and all that sort of thing. I had a good read through this while I was away, actually. Sort of, you have a lot of downtime and on the train and bits and pieces. So yeah, had a good read through this. Very, very happy with what I saw and happy with sort of developments going forward. Still quite happy for them to plough pretty much everything that they make back into the business, because long-term metrics seem to be looking good. Shareholder equity is one of my favourites with them. People sort of get very unhappy about net profit being low. They sort of have always seemed to have been artificially keeping net profit low so that they pay a low amount of tax and they get to reinvest everything back in. And if they're making sort of 15-20% return on equity on their investment, that's far better than sort of paying out a dividend or doing share buybacks when stock price is sort of relatively high, and or doing a dividend, and then would I be able to put it in something that can make 15-20% a year? Considering this is money that I'm not looking to take super high risk on anymore. This is sort of my longer term retirement portfolio, basically. But yeah, I thought everything looked pretty strong. If you sort of take this as a company that isn't focused on net profit, it's focused on reinvesting. But even so, you still have operating income sort of almost the same due to operating expenses sort of increasing quite a lot, cost of sales increasing, fulfillment, technology and infrastructure sort of increasing quite a lot, interest sort of come down slightly, and they had some other expenses. This is sort of non-cash items, the sort of usual adjusted earnings. But I think this is sort of smoke and mirrors basically to keep tax relatively low. Although they do show 21 billion of net profit for the quarter. Sort of net profit is starting to come up. Where did they have provision for income tax? $7 billion. So they're starting to pay a little bit of tax. Of course, you can't sort of go on forever and ever. And their sort of segment breakdown still looking pretty strong. North America sales up pretty strongly. International sales a little bit stronger. AWS, they're sort of not quite as growing anywhere near Microsoft Azure and Google Cloud levels, but 33 billion from 27.5 this time last year, still pretty good. Operating income is sort of a third of that revenue, so it's quite a strong, profitable business. And overall, we sort of saw above. And they give you their sort of year-on-year sales growth. North America 11%, international 14%, AWS 20%. Again, sort of the competitors are doing 30% plus growth, so there is that. But Amazon's still a lot bigger. Hence why when they went down a couple of times, I think in the last month or two, it sort of affects pretty much the whole world, and sort of isn't the best. A lot of people say they wouldn't invest in Amazon because AWS went down, but I think this is an inevitability. There's sort of hackers and malicious people trying to take it down every minute of the day, and at some point, it is going to go down. Balance sheet wise, they do actually have quite a bit of cash. They sort of never historically have ran with this much cash. It's gone down a little bit from December last year, but 67 billion of cash is pretty good, I think. Always handy to have a little bit when they're spending quite so much, and you never know what's coming around the corner as far as your income. And long-term debt is less than that cash, so pretty good. 50 billion is down a little bit from this time December last year, so pretty good. Cash, their net cash company. Most of big tech are, to be fair. So, as I say, far too much to go through in here, but you can have a more detailed look through yourself if you like. I'm sort of very, very happy with what I've read here, and happy for them to be my largest position, and my sort of pretty much, aside from Meta, my only exposure to big tech and sort of, the Mag 7. Well, directly, of course. I've obviously got the reasonably large position in NASDAQ 100. I sort of realised that I've actually got nearly £10,000 invested in Nvidia, sort of indirectly through the NASDAQ. So yeah, I do have quite a bit of that now that I'm going the ETF route as well. So economic news, still haven't got a huge amount. The US are sort of starting to catch up, basically, now that they're open, but we're still looking at sort of fairly old numbers. These are sort of, I think, even initial jobless claims and stuff. These might be September numbers. It wasn't sort of entirely clear. There was like loads of data points released all at once. But yeah, not looking ideal, but still, below 2 million. So I don't think people are all that unhappy with that. UK October inflation was sort of pretty much as expected. CPI a little bit higher than expected, but core CPI sort of pretty much in line on the year, a little bit lower than expected, actually down from previous month. So I guess you would have to see that as pretty good. CPI, yeah, headline CPI down from 3.8 to 3.6. That was expected to be a little lower. EU CPI at 2.4% core. That's pretty strong, and 2.1% headline. So you can see why they are lowering rates, although sort of have held firm for a little bit of time now. And then, yeah, the Thursday you got this absolute barrage of backdated continuing jobless claims and initial jobless claims. So, yeah, all looking a little bit strange. Guessing the bottom one here is the most up-to-date one and is edging towards 2 million. So, yeah, not ideal. 220,000 initial, which is, relatively low, but I guess that means people are losing their job and not getting another one. There's not quite so many people losing their job every week, but they're not finding a job. So that's not great. We did get non-farm payrolls, though, for September, so quite old news. But it was 119,000, a lot better than expected. They did revise the August one down. It was 22,000, and they revised it to minus 4,000. So, yeah, a little bit mixed there. Most of it was private. It's not government jobs. But unemployment increased to 4.4%, where it wasn't expected to. So, yeah, they have. I think they're sort of saying we're not going to get October. We might get a headline number, but they're not going to have the full report until after the FOMC meeting in December. So, yeah, would kind of say sort of get your fingers out, boys. But there you go. UK retail sales and everything, all a complete red wall, looking awful. No real sort of surprise there. I don't think anybody's particularly bullish UK at the moment. And yeah, that was near enough it. A little bit of PMI news, which was very, very positive. Global composite PMI from S&P. I mean, they say global, but from what I understand, this is very, very US focused. So yeah, that's provisional for the whole of November. Above 50 is expansion, and they're at 54.8. People sort of saying the US is in recession now, potentially. That sort of doesn't exactly ring true with that. Services side at 55. Manufacturing a little bit lower, but it's still in expansion. So a lot of this is, you would say a lot of this is probably data center, but then services is at 55 and stronger than manufacturing. So yeah, I can't see that, to be honest. And GDP at 4.2% on the sort of current, daily, near enough daily indicator. I've seen some people saying this is kind of broken at the moment because of the government shutdown. There isn't sort of proper data going into this, and it might be a bit of a false number, but who knows? So portfolio-wise, there's not a huge amount of change here, to be honest. The stock side haven't made any changes at all. Had some little bit of ups and downs. Amazon and some of my sort of big tech or sort of Tech and semiconductors coming down a little. Gold and silver coming down a little. KGHM holding up sort of reasonably well, to be fair. Copper sort of helping that out. But yeah, sort of broadly, everything's just down a little bit. BlackRock sort of nearing the $1,000 mark again, which is sort of below my average price. So yeah, that's slightly unfortunate, I suppose, but nothing too bad. It's the option side where things sort of really move a great deal more. To where I could, come over to the invest side, I suppose, to see where we really are on that. Equinox has come down over 20,000, which isn't ideal. B2 Gold sort of coming down quite a bit. I haven't sort of paid enough attention to B2 Gold and the Mali situation. Somebody pointed out last week, which I should have been. They're sort of a large part of their production is in Mali, and they are essentially sort of being run by the military at the moment, with a terrorist group sort of trying to not necessarily take over the country, but disrupt the country. So yeah, it's a bit up in the air as to how well their gold operations are going to go, whether they're going to be sort of forced to sort of hand some of it over, I suppose, in return for protection, safety, or whether sort of somebody's going to come in and help out the military and sort of try and wipe out this terrorist group. But yeah, not the best situation, and you can sort of see why people tend to prefer sort of your Canada and your slightly more stable countries for gold mining. This isn't just a bet on the gold price anymore. This is a bet on war and politics. So yeah, that is a risk for B2 Gold, and I've sort of held off putting any more cash into them. Have sort of £30,000 in cash, sort of waiting, and yeah, wasn't all that keen to be sort of piling it into this with the Mali situation. But there we go. We'll see. Iron sort of come down a little bit. Sort of explained iron, explained Hive, and that's doing awfully now. 16,000 in the red. But I think I have sold some of this previously, so it's not quite 16,000 lost. Same thing with Himax, really. I'm sort of showing 51% down, but I have actually previously sold out only 40 contracts of the 200, or 50 contracts, I think, of the 200 odd that I owned. But I actually sold, I think, twice my original stakes worth. So I've basically already made 100% on Himax, and or possibly 200%, and what is left is down 50%. So that's a little bit, false, if you like. Kua Mining sort of bumbling around really, and yeah, Nakamoto is an awful bet gone wrong. The Bitcoin treasury companies are not doing anything at the moment, so I sort of put that down as a couple of grand lost, lesson learned. There you go. So interesting week. A lot of decisions still to be made. Whether what I want to be doing with my remaining crypto and sort of this option money once it potentially comes out of here. I don't want to be holding all that many super risky bets and crypto miners and things, particularly long term. I sort of have 5%. I think I sort of put down a rough target of 5% of the whole portfolio for options, and I'm still sitting at sort of 11.34% because they are sort of so tempting. I've got 6% just in Equinox, but I think that can do well. So yeah, we'll see. Portfolio is very much up in the air at the moment. The ETFs are still doing well, and I need to add quite a lot more to them. And I've got my little Bitcoin and Ethereum position here. So yeah, and an awful lot of cash. Obviously, most of this is set aside for tax. So yeah, leave your thoughts in comments below, and like and subscribe. See you soon.